Just yesterday, the Federal Reserve raised short-term interest rates by 0.75 of a percentage point. That matches the increase of the two previous meetings.
CBS News business analyst Jill Schlesinger, she joins us now live from New York to talk about the changes. Jill, always appreciate your insight. So, look, we've seen rate hikes, several this year already. How many more are we expecting this year?
Well, according to the central bank themselves, they are projecting that in the last two meetings of the year, in November and December, we'll get a combined extra 1.25 percentage points for the remainder of the year. And there could be more increases next year, those smaller ones. You know, we're at 3 to 3.25% right now. Next year, the Fed is projecting we will be at around 4.6% in the federal funds rate. So a big move pretty quickly.
The stock market sure didn't like it, though, huh?
Well, look, I think the stock market was really surprised by how hawkish, how aggressive Jerome Powell was in that press conference. Basically, he kind of was looking at the camera and saying, hey, everyone, are you listening? We don't really care if companies don't make as much money when interest rates are higher. What we care about is getting inflation under control. And the force with which he delivered his message, even though it was largely expected, I think that's what moved markets lower yesterday.
Well, I'm looking at the stock market today and already off in the red again this morning, so not a great start on Wall Street. But I'm also thinking about people who may be in the market to buy a car, who may be in the market to buy a home. I mean, these higher rates, some people are sweating a little bit.
Yeah, I think that there are definitely winners and losers. And you're right. Look, the losers are clearly people who are borrowing money. So that could be someone who's got a credit card balance. That could be a new auto loan. It could be someone who's got an adjustable rate mortgage that's adjusting higher, a small business loan. But wait a second. Aren't there also winners? Yes, there are winners, Virginia. Winners are people who are savers. These folks are finally collecting more interest on checking accounts, savings accounts, money market accounts, CDs, and government bonds. So if you're a saver, do a quiet, happy dance, but not around a borrower, because that's not nice to do.
Exactly. Mom speaking over here. Jill, I do wonder, though, because, you know, you can continue to raise these rates. You run the risk of recession. I mean, it appears that inflation is a bigger issue to the Fed than recession is at this point. Is that accurate?
Yeah. You know, it's a fascinating thing because the Fed has a balancing act. They want to get prices under control, so they're very worried about inflation. And yet, you're right, they don't want to raise rates by so much to push us into a recession. So I think the Fed right now is really erring on the side of getting inflation under control. Because let's be clear, if inflation does not actually get lower from these points, we'll end up in a recession anyway, because people will simply stop buying. And that won't be good for the economy either. So they got to get inflation down. That's the goal. That's where they're going.
All right. Thanks, Jill. You can see Jill regularly on CBS Mornings and the CBS Evening News with Norah O'Donnell. For more analysis, you can go to JillOnMoney.com.